Saving $50,000 sounded impossible to me at one point, but it became completely real once I learned how to use smart tax planning to keep more of my money. Most people think making more money is the only way to build wealth. But the truth is, keeping what you earn matters even more. Today, I'm breaking down exactly how I legally saved $50,000 using simple strategies anyone can use, especially if you run a business, invest in real estate, or work as a freelancer. To start, I had to change how I looked at taxes. Instead of seeing them as a yearly punishment, I started treating them like a financial tool. The IRS tax code isn't just a rule book, it's a list of incentives. It rewards people who create jobs, invest in real estate, and build businesses. Once I understood that, things became a lot clearer. The first major change I made was tracking every legitimate business expense. I used to guess, or worse, forget. When I finally got organized, I realized how much I had been losing. Simple things like equipment, home office use, internet, software, and even part of my phone bill were deductible because I used them for my business. These write-offs alone saved me thousands each year, and they required nothing more than paying attention and keeping receipts. The second big move was shifting from being a sole proprietor to forming an LLC taxed as an S-Corp. This single change legally allowed me to split my income between salary and distributions. My salary was taxed at normal payroll rates, but the distributions weren't. Just that structure alone saved me over $15,000 in taxes in the first year. And the best part is, it's perfectly legal and incredibly common for entrepreneurs who earn consistent income. Then came real estate. Real estate isn't just about making rent money. The tax benefits are honestly unreal. When I bought my first rental property, I discovered depreciation, the magical deduction that lets you write off the wear and tear of a building even if the building is actually going up in value. That one deduction alone cut thousands off my taxable income every year. And when I combined that with things like repairs, maintenance, and interest deductions, the savings added up fast. One of the most powerful things I learned was using bonus depreciation and cost segregation. These strategies let me accelerate deductions so I could get more tax benefits in the early years of owning a property. That's how real estate investors create passive income that feels tax-free. And no, you don't need to be a millionaire to do it. You just need to understand the rules. Then there's the home office strategy. Most people are scared to use it because they think it's a red flag. But the IRS literally created this deduction. For people who run businesses from home, it reduced my taxable income even more. And it's one of the simplest strategies anyone can use. When I added everything together, the savings were shocking. Between business deductions, S-Corp advantages, real estate benefits, retirement accounts, and depreciation, I saved more than $50,000 legally. And here's the funny part. Once I learned these strategies, I realized I should have been doing them years earlier. If there's one message I want you to take away today, it's this. The tax code rewards people who take control of their finances. You don't need to be rich to start. You only need to understand the system and play the game with intention. If you're serious about growing your wealth, protecting your income, and building long-term financial freedom, keep learning, keep applying, and never leave money on the table just because you didn't know the rules. Make sure you subscribe to Smart Realty, secrets for weekly videos that help you save more, earn more, and build real wealth through finance, real estate, and smart tax planning.